Intense coaching session number 8. Today we have a back-to-back and we'll have also number 9. This is another war room session. Trainee Alan Vergara. Hello. Hello. Hello,
¿Qué
hello.
pasó?
¿Qué pasó?
¿Qué pasó?
There you go. How are you, Alan? How's everything?
Good. Everything's good, I say.
Amazing. Okay, so I already recorded the intro. You will listen to it as a reference. I'm adding the reference from now on every recording. This will be a back-to-back session on Saturday. We're going to work together in 2 sessions of 40 minutes with a 10-minute break between those. And we're recording number 8, and then we're going to pass to ICS number 9. A couple things we're going to do today. We're going to go all in. I'm going to share with you all the tools in a quick review of tools that you may need to subscribe. They're free, except I will discuss which one may not free, what price they have, where's the value, and as usual, you decide whether or not to take them. At the same time, remember that you have access to them via myself, and I share that with you all the time. So when you see something, you will have more and more vivid idea where from I'm getting that information and why I may be inclined or not to take a trade. Okay. So
I just discovered myself that for Gurufocus, I just realized that I had to subscribe to that because it wouldn't let me go through a more detailed data without taking a 7-day free trial for the premium membership.
Correct. That's correct.
So I may have to subscribe to that as well.
Yeah, that always becomes like how far you're going to take it now. As you can see, based on the result of the war room, also based on the result of the insider report, that a membership with that a full year membership that costs you close to $500, less than $500 is worth your while, especially now that you have a clear idea what are you looking and what information you have to pay attention to. Is a much better filter. But at the same time, I can tell you, I have used Open Insider, which we're going to review today during the session, to find ICPT. And ICPT, Intercept Pharmaceuticals. It's first time last year we recommended. It's 90% return. That's on the files. You can always double check that. Don't trust me, please. Just double check the information. And this year, again, when it dropped, no one gave a penny for it. And once again, one director went back in with a substantial purchase. And I got that from Open Insider. And once again, plus 80%. So this is what I call the zero. This is a concept we're going to go into the ICS number 9, which is drafting a number of securities that you have to master, because it's impossible that you will be, I do it, but it's not the best way to go. I think we have to let you master, focus. One of the things we're going to develop here is for you to master a couple of securities, like 10 securities that you're going to know back and forth by heart. And understanding already who are the insiders, called C-level executives or hedge funds. You will understand when that company retraces, as we are in the bull market, still in the bull market, you will know what to do and where to look for calls options. And that's where we want to take you, in a position that you know back and forth what Disney will do, what Netflix is about, and you know what to do with those two. So, for example, every time you see Disney retracing, you know you have to look for call options right away. Every time you see Netflix going up, it's a victim. So you know you need to look for puts options, because the most likely the opportunity will be to the downside with Netflix and to the upside with Disney. Both can rise, but when things it's the evidence. You made 100% on a trade that has no news were affecting Netflix, but when things went down, I told you the first one on the fire sale, it's Netflix. I mean, I don't know. There's nothing else I can train you to based on the evidence that I shared with you live. I mean, that's enough to say, like, when the next big sell-off comes, and it will happen, who's going to be a victim? Netflix, right there. Also, I think Roku, but we'll see. Now, let's go at it. So a couple of things we're going to see in this session. First, we are going to study Open Insider as usual. We're going to take a look at Gurufocus, and I'm going to introduce to you Earning Whispers, which is one of the things I get on my inbox every day, every week, and allows me to understand where are professionals allocating their bets when it comes to puts and calls and the implied volatility. This is something that I look before I take a trade. It's not 100%. For example, it hasn't worked out fast as I think on Doku. We still have time before the option expired. We're not really losing money as we can say, oh my God, we're losing our shirt on that one. But of course, we need to prepare ourselves and see what we're going to do. So we probably have to ride that one until the end. Earning Whispers, it's a free service. So that's easy to get. And of course, as any other companies, they have other paid services, but I haven't found value on those. I get enough information just by getting the emails. And I will show you that from my inbox in a moment. Now, we are looking at the USDJPY. This is the US dollar versus the Japanese yen. The reason why I'm going to
that's Forex, right?
Absolutely, that is currencies. This is the currency markets. But one of the reasons I explain this over and over again, what you see happening has a background, okay? You're not getting there because of. Now, there is a reason. So, when you're trading equities, when you're expecting the S&P 500 or the Dow Jones to go up, you need also to take a look what is taking place in the currency market. This is 100% on the American dollar versus the Japanese yen. The reason is that investors, when things get ugly, they go and buy Japanese yen because there's a massive liquidity. There are two currencies on this planet that are full of liquidity. The US dollar, whether you like it or not, whether you want to think that the current administration is useless, it doesn't matter. Over the last 4 decades, the most liquid currency is the US dollar. Okay? Second, the Japanese yen. Now, when things get ugly, what happens all the time is that we have investors running to protect themselves. The way investors protect themselves is that they buy a currency that is liquid. In recent years, what we found is that they use the Swiss franc, the Japanese yen, and as it is right now, the US dollar. So when equity indexes when they go down, you see this. You see that's the last week, okay? And it's red. It means that investors were protected themselves buying the Japanese yen. Now, what we see here is the support in a combination of trend Fibonacci at the 38.2%, 108.33. You see the price here. The low was 108.42. And you see the support coming from what we know already, a technical level of 20 exponential moving average on the weekly chart. This is powerful. At the same time, I want to point to you, look at this trend. You see this? Support, 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 one more time, and once again. This is not to say that this currency cannot go all the way to the 61.8, which is 107.62. But we have here what we call the confluence. Very important word, because you have one validation and you have the second validation. Let me bring my pencil. So you have 1 and 2, okay? So you have two important technical reasons for now to see a bounce and go higher. If this is the case, then the S&P 500, which I already shared on the War Room, it's about to make new all-time highs in December with a continuation in January. Why? Because the strength of the currency is telling you.
Regardless of the Christmas rally.
Exactly. This is what I will call a leading indicator into the Christmas rally. This is my leading indicator to know that, yes, we are going to have it. We have an opportunity, and it's going to happen. because there is massive confluence between these two levels, the 38.2% and also the 20 exponential moving average on the weekly. It means that there's very difficult. You will need a massive sell-off for you to see the currency breaking. And that will translate into new lows in the S&P 500. Now, let's take a look at what happened in the S&P. Let me just remove everything.
So Christmas rally is a good thing.
It's a good thing for us. We need it. We need it.
Yes. Okay.
We want it to happen. Now I'm going to go to the S&P 500 and I'm going to remove all the indicators we have. And you can see, look at that pin bar. Look at, wow, that's massive.
Yeah.
And that's the weekly. So that means that last week, Friday, that's what we have. The end. This is the end. So we have a continuation here. Look at that. And every time we have this kind of week,
that tick mark looks like the buyers are really fighting back.
Absolutely, buyers are really fighting back. Look at that. Sellers were in control. Sellers pushed all the way down to this low here, 30.70.
But the buyers fought back.
The buyers fired, pow, 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 push it all the way up, setting up.
That's where it closed.
Exactly. And there's no bearish body. There's no bearish body. There's some sort of indecision. But look at the millions of dollars. Think about the millions of dollars that were allocated here to push it all the way up. Okay?
Yeah. That's very potent.
Yeah, exactly. But we knew here, this is what we knew before that. And this is something that you will find in your in your ICS, previous ICS. We had these levels. We knew this. You see? We knew this happened. We knew also, if you put it this way, we have this rejection. Look at the rejection here. We never have a close. It never broke the 23.6%. It sort of went to look for the 38.2%, and then
but it went back up.
Exactly. And then found support in this area, and it flew up. Yeah, and then we expressed this in this way. We knew that this was
so why target. There why at that level?
Well, technically speaking, you see the higher highs, you see the lower lows, and then you see the higher highs. That's technically speaking, that's a bullish pattern. And the moment prices just reverse this level, because if we push this here, you look at better, look at it, fully reversing from the 38.2%.
Okay,
this is a technical level. And I bet you that if we see it, other professionals are seeing it, and they're botting all the way up. Also, a few other companies, for example, excuse me, a few other companies like Doku, RH, other companies, they have been having good reports, really.
Yeah.
So again, you have all these expressions like, okay, what is happening as far as like understanding what is happening in the U.S. Economy? Some of these companies, they're reporting very good numbers. And as we get close to this, finally, phase one deal with China, there's this like, okay, it's happening. And of course, there's a little bit of talk of tariffs and everything. But notice that this is a repetitive language all the time. There's nothing there's really changing. So it's already discounted. The risk of the whole thing is already discounted. So that's what it is.
Yeah.
That's the consideration that we have to keep in mind. So now, as I said, going into next week, what I'm expecting is now for the S&P basically to do a reversal this way and go, and why not? It may actually go, you have here the 20 exponential moving average around 31.20, and why not? It can easily come back all the way to 31.10. And from this point, then we can have an important continuation. And here we go. We look 31.60, 31.80. This is something that we need to experience this for our last calls to actually make a decent move to the high, to new highs.
But that would probably happen in January.
No, it probably happened before the 20. Yeah, can probably happen before the 20. Yeah.
Okay.
Mainly because you have to think that mutual fund managers, they have to liquidate some positions, so and they have to be up for the year. So this it has to happen before the 20. That's very important. And then of course continuation. the market goes sideways, market can go sideways, and then continuation into January 2020. That's what can happen. That's most important. Okay, so let me just remove this, and this is just comments on the S&P 500. Now let's go to Open Insider right away, and there we go. Remember, the first thing every morning is for you to check Open Insider, see what we have. Now we're looking at the last 3 days as usual. Let's go to simple exercise. We are verifying based on CEO, President, COO, CFO,
and GC.
General Counsel, the lawyer. Now we have a few positions. Let me just double check again. We have a few positions here. We have something as usual. We're going to take a look at the ownership. The first one, plus 19%. Okay, it has a value of almost $3 million. Let's see what it is about. Then we have 9%, not interested. Plus 14% is about $2 million, but it's the same company as you can see. And then we have 5%, not interested, not interested, not interested. There are 2 positions. See how I already filter my search. I already know that I'm not gonna look at those. I'm gonna focus on those 2. Okay. Go to the left. Now I'm gonna take a look at the security. Volume. Yes, I take a look at the security. This is a waste of time because this company has no story. There's no trading data.
Wait, which one? Where are you looking to find that out?
Yeah, you just drag your mouse, go and put it on over the ticker symbol. You see?
Yeah, but what makes you say that this is a worthless?
It's worthless. Look at the chart. There's only one candle. This is just a new issue. It's something that we cannot really trade. I think Warren Buffett is the one that he made a comment on IPOs. He's like, we don't really invest in things that they have no history. Like he put his perspective. We're looking to invest in companies that they have been doing something. When you invest in an IPO, this is a company that is coming from private sector. I mean, it's private. Your accounting is private. It's not transparent. When you when you are a company that it's trading in a New York Stock Exchange, in an exchange, there are certain requirements that you have to deliver, and in order for you to be there, you have to keep it up. If not, you get dislisted. So the idea is, okay, when you invest in an IPO, you are investing in whatever may happen now, because now the rules are more strict on that company. Make sense? So this is why I rarely take IPOs now.
Okay, so this is an IPO.
It is an IPO.
Because this company just went trading. There's only one candle.
It's just one candle. So from all we have in front of us, there's nothing to invest. Absolutely nothing. Okay. So we cannot do anything. Now let me remove this. We're gonna conduct another search. We have now VP, director, 10% owner, and other. And here we go. You see that we have more to look at, but this is pretty simple. Number 1, 0%, suspicious, no. 4%, 25 million. We can take a look at it, but there's something.
It has an M indicator.
Correct.
M code.
And so M code already. We already look at this. 19%, 35%. Is a new issue. This one is actually interesting. I have to take a look at this one. This is a 23%. It's almost $87 million. Write it down. This KOD, Kodiak Science. I'm going to take a look at this one in a moment. We have
not the 0% though, right?
No, of course not. This is 0%, but the previous one, 23%, almost $88 million invested in KOD. 0%, not interested. 9%, doesn't make any sense. Green Line Holdings plus 14%. You can take a look at this one, but no. 0%, not interested. This 14, already look at it. This director. This plus 20% continue. It's another plus 21%. It's the same director. We have to
It
look
has
into.
a code AM though on the
Yeah,
second one.
exactly. Yeah, so we have to like take a look at this. This is a new one. Now
It has a D. It has a D code.
exactly. We don't want
Yeah.
that. So
Yeah.
we have 5%. Not interesting. Plus 66%. CI Signa Corp.
That's a good. That's a
Yeah,
good.
that's a good
No.
amount.
Yeah.
We're gonna take a look. But Signa is one that is recurrent. As you
Yeah.
practice more days, as you do it on daily basis, you will notice a few that they're like recurrent purchases, and they don't really make any sense. Okay.
It doesn't have weight.
Yeah, exactly. It's something that they do all the time. Now
Yeah.
we look at this Eastman Kodak. No, thank you. This is a D
Yeah.
for $11 million. Someone is taking. Someone is doing something. The second purchase, it's for $5 million. It's a director, which is also 10% owner. The company is 250 now. With Kodak, it's KODK. This is a company that can be a JC Penney play, potentially.
Okay.
Let me look at the problem with this one is the weekly volume. It's less than a million.
Yeah, less than a million.
It's not enough. Okay.
Yeah.
So we like this 2929. There's an A here, which make me doubt about it.
Yeah.
And this EPD again, it's the same story. This 0% here is what bothers me. And then look at the chart. Look at the chart. There's not really much that we can squeeze from this company. Okay, so we have concluded our exercise on Open Insider. Okay.
There's nothing right now.
Yeah, there's nothing right now. Do you see how easy it is to spot? How not to waste your time?
Yes.
Yeah. So, so imagine there are all these allocations, all these clusters, okay, and you have to navigate yourself fast. You need to know this is what I'm looking. Let me see what it is. So you don't get distracted because someone that is not trained, someone that doesn't know, they're just looking at this and they're saying, "Oh, look at all those purchases from the insiders." But in reality, there's a lot of D here. There's a lot of derivatives, and there's nothing really to look at. There's one that this is the one we're going to take a look at KOD. Again, same issue, and we're late to the party as well. Look at, it's a new company as well, trading out of the NASDAQ. It went to 10, and this is 64 now. I mean, he bought it at 26, but it was on the 12th. No, this is December. It was on the 6th. Let's take a look, see if there's something that can be done. So when this trade happened, it's kind of weird because they said the trade day was on the 6th. There's no way we had the chance to take this trade. This information is totally absurd. The trade date's the 6th, and then the trade filing day was on the 6th, and then it was already up. It's too late. There's no way we're going to take the trade.
Even though it's only 1 day apart?
No, it was on the 6th, on the 6th. It's not really a day apart.
Yeah, December 6th. That's yesterday.
Yeah, exactly. I mean, there was no chance that we can actually take it. I mean, this move happened. I mean, he bought it at 46. This is absolutely bizarre. You see, sometimes you have to make sense of the information. He bought it at 46. The stock is already trading at 64. And they're saying, so yesterday was when the market was open, and they're saying that yesterday he put that trade in, and that trade got filled, and everything was executed right away. It's not how we get the information. It's a little bit bizarre.
Yeah.
So
it's probably an insider's job within an insider.
Exactly. So you see that you have to look at these things and sort of go deep to understand what is really taking place.
Yeah.
There's one more I want to take a look with you. GLDD, Great Lakes Dredge and Dock Corp. There are two positions. There's one that is a little bit tricky. Sort of a good last 2 years have been really good for this company, and there's a massive support. I can see that massive support up there. Let me take a look at that company closer. Whenever you want to take a look closer to the company, just click on the ticker symbol.
Okay.
You can see what is taking place. Now we have Ryan Levinson adding, seems to be two, maybe it's just one, but
well, it has an AM code.
yeah. So
Uh,
they
an M
adjusted
code
that.
and AM code. Yeah.
Yeah. So with multiple transactions, they amended this. I don't like these positions. So, there's nothing here for us, and that's it.
Yeah.
As you can see, there's absolutely nothing available
Nothing.
on Open Insider.
But we could probably find something at Gurufocus.
We're going to give it a try. That's what we're going to do. We're going to go to Gurufocus. Let's see what they have available for us, and I'm going to share it with
let's
you.
let's not get outside of the of today's agenda though.
What was that?
If that's gonna go outside of today's
No, we have
this
time. No
session's
worries.
agenda, we got time. Okay.
Yeah, we're just gonna do a search. I'm not gonna go into details. What I do is I go to screeners, all-in-one screeners. Do click, and they come up with this new thing. I'm just gonna skip. Okay, they go to the tab Insiders. You see in front of you, and then cluster buying. I look for 1 to 3 insiders.
3.
And I go to value buying. Here we're gonna do only one thing: $500,000 to 5 million. Pretty simple.
So $500,000 is okay.
Yeah, about $500,000. Yeah, in Open Insider, I start all the time with $200,000. Correct. So that gives me from 200,000, which is the minimum for me to think that it's worth. I don't want to take a look at anything. I don't want to take a look at an insider purchase of $50,000. Doesn't make any sense. It has no weight. You don't look at that. But here, what I'm doing, just for the purpose of exploring Gurufocus, is considering the ones that are above $500,000 up to $5 million. Now, look at the selection we have. We have a whole set of new companies. We have Arrive, CBL, Cigna. It's on the Open Insider. This one too. HSAC is not there. It's here. And you have a few companies. Now, one thing to notice is the insider clusters. What I decided is to set 1 insider up to 3 insiders. That's what I want. Okay. Look at this one. We have 3. This one might be of interest for us. We can take a look at that. And what I do here is that I only have to drag my mouse and go into over every ticket symbol to see the volume. Look at the volume. 423,000 shares. Not enough. CBL.
Yes.
3.3 million. This one. This one is interesting. I'm going to take a look at that one. Then we got Cigna. We already look at that.
Yep.
Cigna is a recurring one, so let's see. This one, not of interest. Small. Nope. ICMM. Never. Might be.
Yep.
Yeah, but this company also is a recurring one. You don't know it, but I've seen this multiple times. Noble Energy. Yep. Look at it real quick. And Pope's never in the life we're gonna touch this one. 1,000. Okay, and that's what we got from Gurufocus. Okay, now first company we understand. I always want to take a look at deal today. Where is the company? This company is minus 40%. Okay, so. It could be a purchase. Now I can notice a pattern of recovery. Look at it, from 82 cents went all the way to $1, $5, $40, $50, $60, and now is all the way back to $1.14. Ooh,
is that the underlying price or the?
Yeah, that's the current price.
Okay.
I'm just following the chart, and started in couple weeks ago, but okay, it's coming from 249. It tanked at 80 cents again, went back to 83, and now is doing higher highs, higher lows, which is a technical pattern for bullish. The volume is 3.3 million. 114. Okay, let's take a look at the insider tab right here. It's important since 2017. You see that from 2017, there's nothing, and then boom.
Yeah.
Want to consider. We have a director buying 1 million shares, but he had previously owned 11, so that's like a 10% purchase. It's not a bad thing. And then we have, these ones are small purchases. And actually, we're going to take a look at this. This is a company that we can take risk as well. Because he bought at $1.04, okay? And the company is now trading at $1.14. And he
where is the $1.14?
Here we go. You see it?
Okay, yeah.
Okay. And then you have this one here, $1.04. It's very important. So this is one to consider. And we're gonna explore more outside this session. Okay. Now.
Okay.
Let's go to one of the things that I do all the time. You need to subscribe to Earnings Whisper. Let me share.
Okay.
Earning Whisper is here. Just gonna earningwhispers.com, and let me share with you so you see my inbox and see why I do this all the time. This is actually how I found TGT, Doku, and all those companies.
Okay.
Do you see my inbox?
Yes.
Earning Whispers. So I get in advance these emails. They're free. And what they do is to give me an idea. And I read all this information. And guess who we have here? Costco. Now, what it's saying is this. It will be a 4:15 on Thursday after market close. The consensus earning estimate is 170 per share on a revenue of 37.43 billion. The earning whisper number is 174. Okay. So the way it reads is basically is that they already expect Costco to beat earnings. The estimate is 170. Earning whisper is 174. Investment sentiment going to the company earnings release as 78% expecting earnings beat. This for me is important. I need to read something that is close to 50% to be willing to take the risk.
At least 50%.
Yes, because you need to have at least a 50% of the battle win. If you have 40%, it's not enough assurance.
Risky, yeah.
Yes. Now, once I have this number, I'm confident and I start looking for call options because they're expecting them to beat earnings. So if you're expecting it to beat earnings, you're looking for a higher price. Now, I continue. Consensus estimate are for year earnings of a growth of 4.59% with a revenue increase. Short interest has increased by 19%. This is nothing. There are two ways to read this. Decreased short interest, it means to have less people willing to short your stock because you're going up and they don't want to be squeezed. And in this case, short interest has increased by 19%. This is not something to be worried. I would be worried if it would be 40%. That's bad. So they are building up positions. It's not enough. Since the company last earnings release, the stock has drifted higher by 2.5%. This is very important. From its open following the earnings release to be 10.3% above its 200 moving day average. That means that the day after they reported earnings, this stock has moved at least 10.3% to the upside. Again, this is critical because we need the stock based on the analysis that we do to move at least 10%. Remember the 10% variation?
Yeah.
That's what we're looking. And see all the information I'm getting for a free service. All I get is every day I just wake up and look for the victim of the week. And it's delivered to my inbox. And soon it will be delivered to your inbox.
Yeah.
And that's what I do. I read this information and then I continue and I look into a few ideas. On Tuesday, November 19, there was some notable buying at 916 contracts of the 265. Put expiry on Friday, December 27. Options traders are pricing a 3.7 move on earnings, and the stock has averaged a 3.6 move in recent quarters. So there are a couple things that can happen here. If they beat earnings, there's expectation of 3.7. It's pretty low, okay? But because we bought at such level, we have a combination of 60 and 30 cents. We just need the stock to tick higher for us to cover our risk with the last position. That's why I was willing to buy when it dropped to that level. That it can keep dropping this week, I'm not gonna lie to you. There's a chance that it can drop. But
I think it's already trending at 30 cents.
Exactly. I noticed that it was trending. You noticed that it actually trended to 50, almost to 50 cents. I think 40, something like that. Let's take a moment to pull that.
I actually bought. I actually added to the position on the 30 cents mark, but my adjusted price became 42 cents.
Correct.
Yeah.
Where's the Costco trade? Here we are. Take a quick look at this. Yeah, you see the day high when it went to a day low of 32. Do you see that on your screen?
Yeah.
Okay. There it went to 43. You see? So we are in that balance. And the low indeed is 23 cents, was a previous low. So right now we have a decent opposition here of we're 294. 10% will put us right there. 5% will put us at 350, almost 310, 315, that range. And that will give us a good boost up for us to turn this.
That open interest of 3,261. That's pretty high, right? What's our standard for
1,000, above 1,000?
Okay.
But then you also notice that there's volume, there's activity.
Right. Yeah.
And that's what we want. So the point on this session was to do the exercise of looking Open Insider, a little bit of Gurufocus. There's one company that we want to take a look. This is a company, CBL. We're going to take a look at that company in a different session. But the most important, this is what I want you to take. This is Earning Whispers. And they always come up with this information that totally help you. You see? Roku, disaster company. But that's the most important. And this is what I want you to take for this from this session. Make sure you subscribe. I will send this to you directly now. So you have it on your Telegram. And this will give you directly to your inbox the information that I have been using to find, not now, but for a while, all the alerts that and recommendations that we do. Because this information gives me all this data. This is all data that I have here, but it gives you as you explore the tool, you will see exactly all the information that I'm reading. And from now on, once you subscribe, we can exchange ideas of what is coming. You can always ask me, like, I'm looking at this one, I'm looking at that one. And after this, after you read this information, then you start your journey of looking at the different calls and options. Because once you know what's the average, the difference, for example, let's take a look at another one. For example, look at this Thor Industries, okay? Options traders are pricing a 10% move on earnings, and the stock has averaged a 7.6 move in recent quarters. It's telling you that there's an opportunity for a 10% move up if they beat up earnings. If they do it, the stock can go up by 10%. That it means that if it's trading right now at a close 67, 10%, you're looking at least a call that is at 75. Because the 10% here will be 67 plus 6. That will be close to $73. So you will be looking at the 75, even maybe the 80 as an idea. And that's what I do. It's pretty simple.
Of the call
Correct.
option.
The call option.
Absolutely. Strike price.
Correct. Correct. So in this case, we're going to end on the session number 8. We're going to take a quick break. And we come back for number 9. In number 9, we will continue this conversation. Okay?
Okay.
Perfect. Thank you so much. And go ahead and subscribe to Earnings Whispers.
Okay. Yeah, will do.
Perfect.
Thanks, Jose.
Be right back.
Okay. See you soon.
See you soon.